Hello guys, so welcome back to the channel. So as you have noticed that in the past few weeks we haven't had a clean price action in the market. Price has been really bad. Obviously we all know we are at the end of the year, so we do not expect clean price action in the market. But it's kind of difficult for the undisciplined traders to stay safe in times like this. But this this is where you actually get to know if you are really growing up or if you are still struggling, because if you are not able to hold yourself um, from if you're not able to hold yourself from doing anything when the market is not doing well, then it's a problem. So discipline is very essential in this industry, because you will be tempted many times to hit that button, to enter the markets, even though you can see that price action is not responding well. But you will be tempted, you will feel that urge that you have to do something. And that is one of the most difficult part about trading, is that you always feel the urge. Now, because trading is somehow boring, you know so you can feel like you need to do something when you don't see anything in the market. You have that edge that, hey, I'm supposed to be doing something, especially if there is another trader who is doing something while you are idle. So it can makes you feel like you are not doing anything, even though abstaining from the market is actually doing something. Never forget that. The fact that you are able to decide to stay away from the market, if you are not seeing what you are supposed to see, you are actually trading. Trading is not all about buying and selling. It's not. You could be trading even though you're not trading. If I come to church and I don't see what I'm expecting to see, and I decide to stay away from the church, I'm actually trading. So that discipline to hold yourself, to calm yourself down and control yourself, it doesn't come easy. It doesn't come easy. It takes years of practice, but it's needed. Like, discipline is it's needed. You can start from the very small things in your home to develop discipline. But hey, let's not go into that. So today's video, I just want to show you one thing about market structure. Obviously, you already know that when price is breaking highs, like we are doing now here on the euro dollar, we already know that price is bullish. I mean, this is the fundamental. This is the basics of trading. You already know when price is breaking highs, we are bullish, and when price is breaking lows, like price was doing here, when these lows were being taken out, we understand price is bearish, right? Price is bearish. So that means the bias, the long-term bias here was bearish. Now, the long-term bias goes hand in hand with the daily bias. The daily bias is different from the long-term bias, because the long-term bias has to do with the trend, with the order flow. Wow, the daily bias has to do with your setup. I could know the long-term bias, the order flow, or the trend, as men like to say, but I may not find a trade. But when you have a daily bias, what you are actually looking for is a trade setup. The daily bias is your the move you are anticipating. If you anticipate price to go lower, so your daily bias is to sell. However, it doesn't mean price is gonna sell for the whole day. Your daily bias can be to sell, and you have a setup that gives you 30 pips, and somebody else had a daily bias of buying, and then where you exit your sales, it's where he enters his buys. So both of you are actually correct. Nobody can tell the other that you are wrong, because both of you came out victorious. So you can meet two different traders, they have different bias, and yet both of them are correct. And it's also possible that both of them can be wrong. You should get that right. Okay, so we already know, since price is breaking these highs, we understand that price is bullish. And I see so let me show you this. So price has been breaking these lows, a low, a high, a low, a high, a low. Okay, a low. Then price comes back to put in a high. When price came here, what happened? Price failed to take out this low. This low has failed to be taken out. How do we know that the low has failed to be taken out? I'm not saying this because price, I can see price has gone up. Okay, that is obviously the first proof that price couldn't break this low. But if we let me continue first. Price, after failing this low, price went up and broke this high, putting a new high, a low. So now we are bullish. But then let me put this here and check what happened, because this is on the daily. So if I switch to the 4-hour time frame, you see I haven't moved anything. I'm gonna move this. You see I haven't moved anything. How do we know that this low couldn't be taken out? Because you see price creating a reversal pattern. When price came down, we put in a low, a high, we grab liquidity, and then we break that high, we come back for mitigation, and the price never came back. So we did something like this: high, we break it, we break a high again, price comes back, and then we go up. So that tells me that this low, price is not intending to come to it to be taken out. It could happen in the future, but as for now, price couldn't take it out. So what I mean is, we switched from selling to buying. So the order flow is bullish now. And okay, so the order flow is bullish. So what I want to show you now is be to able to understand the market structure within market structure, structures within structures, or what people normally say as the major structures and the minor structures, bigger structures and smaller structures. If this is on the daily, this is on the daily, right? So if price has taken out this high, if price has taken this high, and then we understand when a high is broken, you don't chase price up here. You wait for a pullback, right? And unlike what we've been taught in the retail theory, that price is going to come to test this high as resistance becoming support, actually price dips deeper, goes deeper into this structure. Okay, now because this is on the daily time frame, on the lower time frame, this move from this high to this low has similar structures. Don't misunderstand me here, so pay attention. We have bullish structure on the higher time frame, on the daily. But if you switch to the lower time frame, such as the 4-hour time frame, the 1-hour time frame, you will find similar breaking structures to sell. However, the bearish structures on the lower time frame are within the daily bullish structure. So I have a diagram here. I don't know if it's called a diagram or something. It has to be a diagram. Now, let me explain this. Take, for instance, these structures in the yellow is on the daily or the weekly. We have BMS, breaking structure, or BOS, whichever you call it, or some will refer it to as shifting structure. So we have it here. It's been broken. Price puts in a high. Price puts in a high, and then comes back to mitigate this mitigation block. This is known as mitigation block or structure, whichever you call it. Now, this orange, this has to be orange, I think. So these orange structures are on the lower time frame. So now, since we have the bias as bullish on the higher time frame, and we understand that structure has been taken out, price has to retrace back into this mitigation block. Therefore, price is not just going to drop, creating, red or black candles, whichever you use, like that. A series of down candles on the higher time frame, on the lower time frame. On the higher time frame, that is what is going to happen. It's a series of bearish candles, but on the lower time frame, because there is within this higher time frame candles, there is retracement, and that retracement on the lower time frame, it will be printing structures. So whenever you see it, do not be confused that now price has created a reversal. And mind you, when we have this structure on the daily, here you will see some kind of the smart money reversal. This you will see it's going to happen. All right, it doesn't mean that price is there is a reversal in price or a reversal in the trend or the order flow. No, it just means because this formation here is a bigger time frame. So for price to come back into this mitigation block, there is going to be some kind of reversal on the lower time frame, but the reversal is only intended to come into this mitigation block so that on the higher time frame we could continue the up move. So since you are looking for sales in here, your plan is to take sales from these blocks here all the way into this their structure until you see another reversal. You see here, when price took this low and the high, that's what is going to happen on the lower time frame. So the reversal you see here, you should never make a mistake. If you are a swing trader, I do not swing, but if you are a swing trader, do not hold from here and think that price is going to break this low and continue down. It's the same thing. Even if this was to be the 1 hour time frame structure, M15 or M5 is going to print substructures into this mitigation block. Now I'm going to show you what I'm talking about in the live markets. Why am I explaining this? Because do not be confused when you have a long-term bias on the daily or on the weekly. Do not let substructures or minor structures or smaller structures, smaller moves to confuse you, right? So now take note of this high that has been put in, okay? So I'm going to remove this. Take note of this high. So I'm going to switch to the preferably on the 1 hour time frame. Now, what do you see? We see, first of all, let me move to M30. What do you see in here? Let me zoom in. And I swear to you guys, I didn't even know. You heard me talking about the price could show a reversal pattern. I didn't even know it was here because I didn't even check it. But we see it here, right? The low is taken out. Before that low was taken out, price had taken out this high. Can you see that? And then price retraces all the way back in here into this mitigation block. This actually is the order block. This one, like one, two, these two candles is the order block. So price comes back into it. I can use a fib. Price touches 62% level and price fails to break it. Then price breaks this structure, leaves an order block. Price comes back into the order block and fails to break it. So now when you see this on M30, you will think that we have a reversal. So therefore price is going to start falling until we break this low. But that's not true. So we have, first of all, a reversal, a breaking structure. So you could look for entry here to sell. Price makes a fair value gap in here. You could look for sell after breaking structure. Okay. And price breaks another structure here. You could be a seller. All this is an order block. This huge candle is an order block. You could look for sales here on the lower time frame. Price breaks another structure and comes to this order block. You could look for sales. Price breaks this low, comes back into this order block. You could be a seller. Another breaking structure. You could look for sales. However, this was news, so you wouldn't be interested in this formation until price touches what? The higher time frame the higher time frame. Let me see on different time frames until price touches this down candle, which happens to be the order block. It's more clear on the 5-hour time frame. On the daily, price comes into this mitigation block. You can see we have the high of this structure, and we have the low. It's already there actually. We have the low here. Okay, this is the low right here, and price comes back into this structure. And if I remove the replay feature, you see what happens? Price goes up and takes out this high. So you see how price is creating structures within structures. So the overall bias did not change. We are only moving with order flow. And since a high has been put in here and price has to come back, we just move along with the structures that are being printed on the lower time frame. But the take profit, where you have to wait until price shows you the next move, is here. You have to be out. You have to be out. And now the confirmation that now we are bullish, to me, was shown when price broke this high. This high. Why? Because it was this high that created this low. So even if price takes out this high here, we are bullish, yes, but it's not a long-term bullish move until this high is taken out. So now there is a possibility that price could retrace into this higher time frame structure in here and then continue going up. Take note of that. Now let me move to H1 again. I want to show you something. Was it euro or pound? Has to be pound. Just a second. Okay, so now look at this. Let me start from the daily. The daily is breaking highs, and we have actually a divergence because pound dollar has taken this high. Okay, and euro dollar has taken this high. Euro dollar has grabbed liquidity from this high, but pound dollar hasn't taken any liquidity from this high. This is a pool of liquidity, and that's a divergence. But then on the daily, we have a break in structure when this high was taken out, leaving a daily order block. On the 12-hour time frame, we have a huge order block in here. We have a break in structure, and we have a gap in here. Okay, and on the 1 hour, look at this. On the 1 hour, we have a break in structure. Price comes back into the mitigation block. Price goes up. Then price takes this another high here. And then price returns right here. And this is where I bought, I think it was on Friday. This candle, I took a buy, and I think I went out with about 25 pips, 1:2. Why did I not hold? Because these are smaller structures, These have no power to push price up. Why? Let me explain. If I switch to H4, what do you see? What do you see? We have a breaking structure here. This is a major structure. These structures, you can even see, guys, when I switch to the 4-hour time frame, the structures that I showed you on the 1 hour are no longer visible. Can you see that? You can no longer see them. So these small structures cannot drive price up. Price is, price has to come back in the structure, and then a decision has to be made either to take out this low or this low will be protected, and then price, this low can be defended and price will go up and break this high. So that means if price comes down, it will put in, because we have a high, right? We have a high, we put in a low, we put in a high. So price has to put in a new low. Okay, maybe touch here, maybe here, whatever, or maybe this fair value gap on H4. All right, but it has to be under the equilibrium. So we have to put in a new low that will drive price up to put in a new high. All right. So any buys, look at this. Look at all this move. Look at this move, right? This is liquidity voids. Price has to come and cover them up. So any buys, any setup to buy here was more of a scalp, because I knew price cannot just create a buy setup and then it could happen, but it's not likely to happen because of this liquidity void that has to be covered. Okay, so that's how you need to understand the moves of the market, like market structure. You need to understand it in a way that even if you get into um, uh, um, a trade, you're gonna hold it for hours or for minutes. And you can see, if I switch, let me go to M5, I show you. I think my entry was, yeah, my entry was right here and about 25 pips. And after I got out, immediately price went down. Okay, so do not confuse lower time frame structures to higher time frame structures. Every move has a structure within structure. Every move. If we come in here, you see, this was a bullish move. Let me go to M15. Or M5. What do you see, guys? Can you see that? Can you see a low, a high, a low? Price comes back, but it doesn't touch our area of interest, but it's a structure anyways. Okay. Can you see that? Can you see that? Guys, price would do the same things over and over and over and over. Okay. So my emphasis in this video is, when you have a long-term bias, anything you see after a breaking structure is a retracement. It doesn't change your bias. Your bias is not changed. It's only a retracement that is coming back into the structure that was taken out. So I hope this has made some sense to you and you found value in this um, video. And look at this. This is the same thing with, look at NASDAQ. Look at NASDAQ. So NASDAQ just broke this high. And we have a low here. And we have this liquidity void in here. And now we have this high. Why? Because after price has put in this low, price went to put in a high. And then after that, price has been in consolidation. This is consolidation or accumulation of orders. So now, is it that NASDAQ is bullish or bearish? For me, NASDAQ is bullish. However, since we've put in a low and a high, we need to put in a low. This could be a low, so price is going to put in a high. But the problem is, I think that, let me be sure. Yep. So it touched 50%, but I do not think this could be a low. We have also equal lows, if you could see. I'm thinking they could come in here, put in a low and a high. But you never know because we're at the end of the year and soon is going to be NFP. So they can actually keep NASDAQ into this consolidation, accumulating orders, getting ready for the NFP. All right. But the purpose of this video is not about like my expectations on Nasdaq or any asset. I just want to show you structures within structures. Let me look for one more example. Just one more example, and then I'll be done with this video. Let me look at DAX. Look at this. So DAX has put in major structures in here. A low, a high, a low, high, a low, high, low. And then we start smaller structures. High, a low, a high, a high. Okay, can this be a low? No. So that means if there is no low, this is not a high. This whole move you see here is a high. High, a low. This can't be a high because we didn't produce a low. And you could argue that this is a low. It's not a low. On the lower time frame, it is a low. But on the higher time frame, it's not. So what am I expecting on DAX? I'm expecting DAX to print a what? A low. I'm expecting DAX to print a low, probably later on print a high. If you look at this extent, look guys, you don't chase the market, okay? You don't chase the market. If you see price extending higher, look at these moves. Look at this move. Look at this move. price extending this much, you have to expect a drop. All right. But anyway, guys, this is it for today. I hope you've enjoyed the video. If it's not clear, you can watch the video again and again to understand. So I wish you good trading, guys, a beautiful week, and yeah, take care of yourselves, guys.